It's October, so you know that means our tokens go up. Everything's ripping right now. Bitcoin ETFs, Bitcoin Hashrate, even Bitcoin Ordinals are skyrocketing right now. Bitcoin bearing down on an all-time high. Maybe it already hit by the time you are hearing these words. Welcome to Uptober. This time, we're bringing receipts.
All right.
Okay.
It's Uptober.
It's
And
October.
for those of you who don't know what Uptober is, it's in the name. And Bitcoin seems to follow these scary patterns historically. And, past performance is not indicative of future results, but it's kind of keeps happening.
Yeah.
And as we are recording this, Bitcoin is tapping on or knocking on the door of $121,000. It is up 2% over the last 24 hours. And sentiment's good right now.
Oh, man. And you know what's funny is even I just think 2 or 3 weeks ago, Bitcoin had crashed all the way down to $107,000. And people were posting screenshots on Twitter of their friends asking them, is it over? Is Bitcoin going down? Was crypto all a scam? It was a scam the whole time? And the answer is, yeah, crypto probably was a scam, but not Bitcoin. Bitcoin, we're back. And it's wild. By all these metrics, Bitcoin is absolutely just ripping everywhere. And we are going to go through those. It's a banger of a month. You can feel it. The hair on my arm is tingling because you just know that we're going to take another leg up.
You can smell those green candles burning. You have an interesting tidbit, an interesting stat that kind of went under the radar this week to open with.
Yeah, I'm amazed I really didn't see this. Maybe someone else posted it, but this was kind of news to me. So obviously we had the Bitcoin ETFs open now over a year ago.
Almost 2 years at this point.
2 years at this point.
January 2024.
Yeah, and we've known that Bitcoin ETFs, really popular products, huge inflows, successful out the gate. But I think the news story this week that we're leading with is that BlackRock, which is the king of all the Bitcoin ETFs, BlackRock's IBIT iShares ETF, Bitcoin ETF, popped into the top 20 ETFs overall by total assets under management. This is crazy because, again, I don't know the history of what the big ETFs have been and and all of what all these metrics mean, but here we have according to TradingView, which tracks the largest ETFs and trusts, but BlackRock's iShares Bitcoin Trust ETF IBIT just cracked into the 20th place overall for all ETFs by total assets under management. That's huge. Look at the ones above it. It's the Vanguard Total Bond Market, Vanguard Total Stock Market, iShares Core S&P 500. We're talking index type funds. And then also if you look at these, all of the focus of these other funds and ETFs is total market of a certain category, an investment grade, trust, gold, mid caps. And then you have number 20 as its focus, according to TradingView and as a category, long Bitcoin, short USD, the 20th largest ETF. This is big news, Colin.
Yeah, it is. Suitcoin summer has melted into turtleneck fall, where you're still having the same conversations about MNAVs and boring corporate treasury stuff. But just going back to piggybacking on a few things you said there, Charlie, this seems to be the quickest rise to the top 20 of an ETF in history. I haven't found anything from cursory searches to suggest otherwise, but it's just an absolutely meteoric rise for the Bitcoin ETF and for BlackRock in particular. And I think it's another reminder for me, at least, one of the biggest frustrations from traders and Bitcoiners, or at least people who follow on-chain metrics this cycle, has been, where's retail? And the answer is they're piling into the ETFs. We've said it before on the show, but that has been the biggest retail driver of this current cycle, right? You obviously have a lot of institutional adoption that's moving the needle more, but the people who are going to buy Bitcoin on exchanges and do the things that we do have probably been around for a while, and they're not changing their habits. In fact, they might even be tapering back and not buying as much because they've made it, right? Well, when you have the ETFs open, I just think back to a conversation I had with my boomer father-in-law where he was like, oh, so this is like a check of approval. This is kind of, the powers that be in Big Brother and, the traditional financial industry saying this is an okay asset to hold up to a certain allocation of your portfolio. So I think that has been one of the largest drivers of retail adoption. It's your older generations, rolling their 401ks and IRAs into Bitcoin ETFs, or also even just Bitcoiners doing that. A lot of it who try to max their exposure by taking their 401ks and putting them into iShares or another ETF. And so like you have these instruments for the people who don't care about Bitcoin's unique monetary properties and don't care about having a censorship resistant permissionless money. This is the same as holding it in an exchange, right? Like you're just in it for price exposure. There's no reason to maybe buy on Coinbase when you can just do it through your Fidelity account.
Yeah. And, I'm want to, criticize the corporatization and centralization of Bitcoin custody. But at the same time, you actually have almost a structurally different product than an exchange. It's similar from a like someone else holds it standpoint, but also like these are much better regulated pure play products because they guarantee and they prove they have, it's basically proof of reserves, because they don't really have like the same kind of liability obligations. I mean, so I'm getting some numbers from BitGet here on just high level Bitcoin ETF data. So yesterday, that was October 1st, so Wednesday, the US spot Bit ETFs brought in 675 million, a massive single day inflow. And then today on Thursday, markets I think just closed. iShares alone brought in 405 million on the day. This is significant. Also if you aren't aware, there's, a dozen Bitcoin ETFs. Well, now there's over a dozen. I guess it looks like 20 Bitcoin ETF type products. And BlackRock alone is bigger than all the others combined. This is, it's like it's the king of all the ETFs. And so
Larry Fink thanks you for your Satoshis.
Yeah. Larry Fink, was it just 2 years ago? No, it was like 2.5 years ago that he was literally just saying it's still a scam. And here we are. His ETF, top 20 ETF.
His company owns the most of it out of any of the ETF providers. Yeah.
Surprise. Whoa, gotcha. If you were watching too closely, did you blink? Because he owns all of it now. Crazy story, I think. It hasn't made the news yet. When you're listening to this Saturday morning, anything could have changed. Literally, 24 hours is an age in this.
This will get picked up and it'll be used as a explainer for the current rally. I mean, as it is, right? But I do think that this is the bellwether for where the market is at this point. Like what the ETFs and what the institutional inflows are doing, you have to pay attention to them.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Let's move on to the other metric. This is really your wheelhouse, Colin, which is network hash rate. So if you're not listening to the Mining Pod all the time, we cover this a lot over on that podcast. But mining Bitcoin's hash rate always hitting all-time high, obviously, but it hit a major milestone of a zettahash over the past couple weeks, maybe 3 weeks. That is a major milestone, Colin.
So it's a huge milestone. I think that Bitcoin mining generally is not explained well and is misunderstood as to what hash rate is. So just a quick primer. Within each ASIC, there are hundreds of thousands of little goblins that are taking water bottles You know when you do that little flip thing where you try to get the water bottle to land?
Yeah,
Well,
yeah.
the goblins are doing that over and over again. And once one of them finally lands it, they screech. And the rest of the network hears them and realizes that they won the next block.
Yeah.
Obviously, that's not true. But the fact of the matter is, it's actually kind of an interesting little analogy, because ultimately what Bitcoin miners are doing is they're not guessing, they're not making complex math. They're not computing complex math equations. They're not trying to like guess some secret formula. They're just producing trillions of numbers per second. And so when you see Bitcoin's hash rate hit a mark like 1,000 exahashes, which is we used to measure in exahashes, now it's zettahash. 1 zettahash equals 1,000 exahashes. That tells you that there is 1 sextillion guesses happening per second to secure the Bitcoin network. And why this is happening now, why are we just getting over 1 zettahash? The reason is because summer's ending. Mining pod listeners will know in the summers in the US, particularly where the majority of hash rate is now, or not majority, but 30, 40%, maybe 50. During the summer months, curtailment and demand response programs are very popular within a number of the grids in the US. And what these are is in the summer months when, it gets really hot and there's a lot of stress on the grid because everyone's running their ACs and activity is pretty high. Sometimes the grid can have a shortfall for power. So Bitcoin miners and other industrial consumers will shut off at that time, and they'll usually get either credits back for their future power cost, or sometimes they just have to do it because it's in their contract and they don't get paid at all. But they will power down when prices are high, and they'll shut off their hash rate. And so over the summer, we saw hash rates stall out because these curtailment programs were going on all over the US. Now these curtailment programs are ending because we are cooling into the autumn months. And hash rate, as Nick Hansen, CEO of Luxor, once described on the Mining Pod News Roundup, hash rate's been like a balloon held under the water, right? Like a beach balloon. Now it's popped back up. Most people were expecting us to get to a zettahash this year, some quicker than others. We had a really good report from Val Rousseau, a Bitcoin mining researcher, that basically put it at where it is right now. He did a really good job of factoring in how the tariffs and other geopolitical factors would affect hash rate. But the TLDR is summer's gone, weather's cooling down, hash rate is ripping. And it doesn't matter if hash price, which is how we measure mining revenue, is low right now. It's at about $50 per petahash per day. Historically, the all-time low is about 35, just to give some context. Because a lot of these miners are deploying new generation machines that have really good energy efficiencies. So their margins, even at this hash price, will be pretty good. So, we expect this to continue to march upward. And this came quicker than some expected. I think for a lot of miners, though, this was maybe a little bit further on than they thought when we would hit one zettahash. So,
it's funny just like to look at how quickly the narrative evolves, because we've been telegraphing this for a couple years in Bitcoin, especially in the mining community. Like you could see people are adding hash rate relentlessly. Hash rate was accelerating, even though a lot of miners are now pivoting to AI. You still see just massive hash rate coming online. But I want to bring up this report from River from 2022. River Financial, great outfit, highly recommend, especially their like education product. But they put out reports sometimes, and here's a report from 2022 they put out, which I was like scrolling through kind of as I was reviewing the Zetahash topic, and they had a projection back in 2022 of when we might hit a zettahash. And if you're listening, the short version is they just tried to like look at current hash rate growth and just project that onwards. And so they placed, according to that heuristic, they estimated that we might hit a zettahash between 2033 and 2046. Now we hit that in 2025, 8 years prior to their soonest projection. Now they do make some caveats, obviously asterisks, but just to like demonstrate what a predominant, reliable like research outfit put together as a potential projection just 3.5 years ago, being close to a decade off, is very significant. And, this just goes again to demonstrate that things can happen so quickly. But you know, they published this report during the depths of the FTX down, actually, FTX hadn't even happened yet when they published this. I'm looking at the date. It was summer of 22. So like, you know, just think of how much has evolved and happened since then. And so, as Bill Gates says, we overestimate what can happen in a year and underestimate what can happen in a decade. So, Zetahash onward.
Yeah, I think that, and you know, not to pile on Sam Waters at River, the head of research, and the guys who put this together, because they put together some fabulous stuff. But I think this is just an example of not necessarily fully being able to grapple with an industry that you're not in, right? Like an exchange put this out, right? If a Bitcoin mining company put this out, I would be putting them on blast because there's absolutely no reason why they should expect this. But to me, the flaw in the methodology was taking a backwards looking view and looking at prior hash rate growth and using that to extrapolate future hash rate growth, because the two things that absolutely doesn't account for that are essential. Number one, it doesn't account for advancements to chips. You know, every generation of chip consumes less electricity for higher hash rate output, and the advancements are exponentially greater. So they stack, right? They end up getting, you know, the advancements that you're getting out of something like a GPU to an ASIC is huge, right? They stack from mining hardware to mining hardware in terms of leaping from one to another. They don't stack as well in terms of like once you get to the ASICs, you have incremental improvements, but they're still big and they add up over time, right? So they didn't seem to factor in the efficiency improvements that we would have seen between 2022 and 2025, or they just got them wrong. They also didn't factor in just general demand for the ASICs. I guess maybe they thought demand would be low given where we were in the cycle, but you have to factor in that Bitcoin might rip, right? Like we saw, and hash price might recover, or you might get some black swan thing like the Ordinals market blowing or surging, right? And then transaction fees are super juicy for like a year and hash price is higher than we thought it would be, supporting more hash rate. Just the bottom line is we used to do these at Luxor. Ben Harper and some of the finance guys lead their projection models for hash rate. They do a really good job, and they have a supply and demand model that looks at every single variable you would want to look at in terms of how much hash rate could the network support at a given time. And in that supply and demand model were projections for how much hardware the ASIC manufacturers would be producing. So all that being said, like actually projecting hash rate is extremely difficult, and you have to have all these variables within a reasonable confidence interval in terms of like your error or your margin for error. And I think that when we were doing the projections in like 2023, when we first started the projections report, we landed on somewhere in 2024 and 2025 for a Zetahash. I think our original one was 2024, but that just goes to show you can also, you know, overshoot, going back to the Bill Gates quote.
Yeah.
Because I thought we were going to get there a lot more quickly than we actually did. But
yeah, a lot going on there. And so this is also on the back of whatever term you want to call minor rip September, where we saw, I would say, the harbinger of this particular crypto pump, which is Bitcoin mining stocks have been doing pretty well. And that's been that's been almost like siloed narrative outside of Bitcoin and crypto. Like some of these like public mining stocks, which they'd not kept up with the broader market for quite some time. They started hitting highs in September. Bitcoin mining stocks hit record $58 billion market capitalization in September.
Since June, Iron is up, leading the pack. It's 624%. Applied Digital up at 345, Cypher up at 321, Wolf at 279, Hut 8 at 179, Bitfarms at 179, et cetera, et cetera, et cetera. I mean, every single major Bitcoin miner is up, some more than others. And I think the biggest takeaway, though, is, funnily enough, this has almost nothing to do with Bitcoin mining. I mean, some of it is in response to Bitcoin surging. But the fact of the matter is, if you look at the leaders, Iron, Applied Digital, Cypher, Wolf, and Hut, Bitfarms, Riot, the thing all of these have in common is that they are pivoting towards AI and HPC strategies. Some are taking different approaches, like Iron is doing a NeoCloud model where they're owning GPUs outright. The others, like Cypher and Wolf, are building PowerShells, infrastructure, basically massive data centers for other people to park their GPUs. But the fact of the matter is the AI and HPC narrative is still in full swing. And a lot of the miners who put in work over the last 2 years to actually establish legitimate business lines for AI and HPC have been reaping the fruits of that recently. I mean, we've seen massive deals with Wolf getting a deal with FluidStack with like a couple $2 billion worth of income or revenue from that backstop by Google.
Hyperscaler arm.
And Cypher did the same thing. Also a FluidStack deal backstopped by Google. It seems like Hut 8, given the price action, I would not be surprised if we saw an announcement from an AI and HPC tenant or some sort of, big business development there. And Bitfarms also, moving towards building out AI and HPC services as well. So this has been the investment thesis du jour, and it's not going away anytime soon, at least until this tech bubble, AI bubble pops. But for some of these miners, this has been really the only thing to get them to catch a bid, because they have not had the same correlation to Bitcoin this cycle as we've seen in prior cycles. Like the investors and the analysts are getting much sharper when covering these equities, at least on the Bitcoin mining side. They're not just looking at cost per coin. They're not looking at how much Bitcoin is worth at a given time. They're looking at the company's hash price. They're looking at the cost to produce that hash rate, all of these things. So,
okay, so you got to do your wheelhouse, which is, I would say, real businesses producing real revenues in real world economies. Now it's time for me to flex my totally fake JPEG bullish story, which is Ordinals. Are they back? Yes, Bitcoin Ordinals, those cute little JPEGs and the associated crazy meme coin economy surrounding this, which is surprisingly maybe anywhere from a third to half of Bitcoin's transaction activity per day. Still not had a good year, but the past week they've caught a bid finally. So here is Magic Eden. Magic Eden is the place where, the largest marketplace for people trading these assets. And look at that. On the day, every single collection, the top 10 is up double-digit percentages, with the exception of Taproot Wizards, which are 6.3%, but also it's in a higher ticket item. So, I mean, all of these are up. They're up pretty big on the week, and they're mixed across the board on the month. But the thing is that there's finally some like activity and hope entering the ecosystem. And I'll share one fun little story about this. So one fun little thing, and I know because the Ordinals people listen to the show and they wait for me to talk about Ordinals. I'm going to talk about it. I'm gonna talk about one of the funny things happening. And if you don't like these things, I'm sorry. You can cover your ears. You can't take this type of conversation. So
get out
of here. Yeah. Okay. So the Degens have done it again. They have come up with this concept.
They've come up with another Ponzi scheme.
Do what they do best. We have here on the screen Node Strategy, which is basically a MicroStrategy play, a DApp, a digital asset treasury, for one type of these Ordinals assets, specifically node bunks. So it launched this past week. I think this kind of thing pumped everybody's bags. They're trading on primarily on a platform called Radfi, which does this kind of like multi-sig, like locking scheme. Anyway, but it's pretty fun to watch because they have a whole. It's like literally the group, the DAT, if you will, does generate some fees, that are traded through it, and then it uses those fees then to buy back more of these assets. So
people aren't they're not giving them money. They're earning revenue from
both
trading fees.
The answer is both. Yeah.
Okay.
So yeah,
arguably the fact that they actually have trading fees to buy it gives them kind of more. It's kind of more interesting than just a pure play crypto DAT going and just buying a bunch of Bitcoin with like a convert, or look a convert or something, right?
Yeah, I look at the Hyperliquid story. It's a platform that produces revenues. So, and then they use those revenues to buy back the asset that it wants. I mean, the revenue meta, that sounds like a real business, doesn't it? So, what's funny is on a long enough timeline, crypto just begins to resemble real businesses. Surprise! Yeah. Most of this stuff is just it's nothing new. on a new platform.
It's the same stuff, but you get to feel cool doing it.
Yeah. So anyway, I thought I'd share that because it's a fun little glimpse into the Ordinals ecosystem. And if Ordinals come running back, y'all better be ready. I'm going to do some Ordinals related podcasts on here, and we're going to talk about them again because Ordinals is what kicked off Bitcoin Season 2, and so we got to go back.
Charlie's dying to come home.
Yes, look, I can only talk about treasuries for so long. Man, get me back on chain. I wanna transact on chain. I don't care what I'm transacting. I just care that it's back on my home field, which is Bitcoin on chain. So thank you all for listening to Bitcoin Season 2. Make sure to like and subscribe. If you are listening on Spotify, make sure to like the star and give us a review. Apple Podcasts, same thing. YouTube, like and subscribe, hit the notification button, and we will see you all next week.